Welcome to your Monday edition of FreightWaves Now. John Kingston's here with us for our oil update, but first let's talk to Zach Strickland and see what he's got to say to the brokers.
Hey everyone, and welcome to your brokerage update for Thanksgiving week Monday. So we're entering peak season right now, and behind me I've got our outbound tender rejection index for the United States. As expected, pretty big increase versus last week, 6.98%. So this has been climbing up steadily since about the middle of the month, probably early month, but it's really starting to pick up now as we're entering our big time of year where you're going to see a little bit more freight coming into the market as well as declining capacity. A lot of that has to do with driver availability not being as prevalent. So behind me now, I've got our outbound tender rejection index weekly change combined with our outbound tender volume index. Anything with a lot of freight volume, tall, big, beefy markets. Harrisburg up there, Atlanta down here, both very tall markets because they have a lot of outbound volume in them. Anything in these reds indicate a lot more tender rejection. So those are going to be the areas that you need to make sure are covering your loads. Also checking those loads for more, make sure that they're covered today. Carriers are going to stop showing up because they're keeping their drivers a lot more bound into their region. So about 500-mile radiuses about this time of year. So let's check out a few of these markets. So Little Rock, Arkansas, the one you saw there in the dark blue, seeing a lot of increase in outbound tender rejections for van and reefer, so make sure those are covered, but also check the load boards for increasing activity in this market. It's going to be one of your higher rejection rates, so increased rate pressure markets right now. A lot of agriculture in that area. So just checking some of these length of hauls, tweener, long haul, anything over 450 miles, a lot more volatility and a lot less capacity in this market. So that's going to be a lot easier to make a little bit more revenue. Carriers may not be into that right now though, because like I said, they're keeping their route guides a lot tighter this time of year. Last up, let's look at the Harrisburg market. Harrisburg, one of the top 5 markets in the country. A lot of regional activity out of this market, but you see both van and reefer rejection rates going up. Not a lot of reefer activity right now, but van is a big deal right now. A lot of short haul moves, so make sure that you keep all of that covered, especially on the managed transportation side, but also check those load boards for any potential opportunities. So that'll do it for today's brokerage update.
This is John Kingston for FreightWaves Now. We've got a few random observations about the oil markets as we head into Thanksgiving week. First thing to know is that global oil markets do trade on Thanksgiving Day and on the day after, and they've got this sort of surprising history that a lot of times they've gone absolutely berserk for one reason or another. So everybody's all the oil traders are kind of quiet at home eating their Thanksgiving turkey, and suddenly they find that the world oil market that day went crazy, or they do so on Friday. So don't necessarily think that this is going to be a week off. It could very easily be a very busy week. It's actually been kind of a month that things have been, I don't know, you say quiet in the sense that the wholesale price of diesel ended up not that much down from a month ago, but on the way there has been very rocky. And this is kind of this very strange market where you get a couple of days of some significant drops and you figure, okay, we're on the road to much lower prices. Then they're shooting back up and nothing seems to face it off its long-term stability. But there's a couple of things going on. First of all, there is a market that has moved quite a bit, and that is Los Angeles. Los Angeles prices, California prices are well known to be significantly above the national average. That hasn't changed at all. But you look up here, and the ULSD rack price a couple of weeks ago was about $260 at the rack, now down at about $240. They had a lot of refinery problems out there. Those refinery problems are mostly behind them. Some of it was scheduled maintenance, some of it was unscheduled maintenance, and as a result, drivers out in California are certainly get a significant break. Also want to note that at the end of next week, on the 4th and 5th of December, OPEC is going to be meeting in Vienna. The assumption here is they're going to take their existing production cuts and simply roll them over to the next 3 months of the year. They're not going to do a full year, but that will be the expectation. There's also an assumption that they need to do more than that, but they're really not ready to do that. So it should be a very interesting meeting. Also want to notice one last thing here. It has nothing to do with the price of oil directly or the price of diesel that you're paying to fill your truck, but let's look at the price of ExxonMobil stock. And I bring this up just to kind of show some of the problems that the oil industry is having. ExxonMobil is a solidly profitable company, and yet you see from July, even in a rising stock market, you see what ExxonMobil stock has done. This is happening even there as they're throwing off a lot of cash. They're paying about a 5% yield. Why is this happening? It's happening because investors are really souring on oil. They're souring on them in the short term. They don't see any real basis for the price to go up. They're souring on them in the long term because they feel that, you look out to 2030, 2040, you're going to have displacement of oil consumption by electricity and other energy sources in vehicles. And they're souring on them because the ESG, environmental, social, and governance profile of oil companies is never going to be that great. That's the nature of oil. A lot of foundations, institutions, they're pulling out of fossil fuels. They don't want to be there. And this has really taken a toll on ExxonMobil stock, but I'm not a stockbroker. I would never recommend anything, but I do want to note that this is a company that does hold about a 5% yield. Anyway, that's all. Have a good Thanksgiving, and we'll see you next week.
Welcome to your Monday Carrier Update, sponsored by PowerFleet. My name is Kyle Cunningham. Thanks so much for joining me this week. As we start off the week, it's a really good time to be in the world of freight. Number one, it's right before the big push, but right here you can see back above 10,000. So 10,058 on our outbound tender volume index. Very positive, promising signs. You can see this orange line, which kind of dictates the general trajectory. Not a true leading indicator, but last year's came way down and flattened out early before the Thanksgiving holiday. We're at here 10,058. Very good news. Let's take a look and see what's going on in regards to outbound rejections in terms of length of haul. We got the outbound tender reject weekly index here as the height. So off the map, the taller the markets, the bigger the change over the week, and the darker the color is the higher long haul outbound reject. So if you have any freight in any of these any assets in any of these markets here, you're going to get a better percentage on those assets, considering that the long haul outbound rejection is elevated. Let's take a look at some markets around the country. Oklahoma City, Oklahoma. Big time moves in regards to inbound volume coming down 1% in a small market, a bit of a big move. Outbound tender volumes down a little bit, but your outbound tender rejects at 5.8%, so a big jump up from the beginning of November to where we're at today. If we take a look over at Tulsa, Oklahoma, right around the corner as well, inbound above outbound still looking pretty favorable for carriers with a 10.5% outbound reject index. So big jump down, coming back up again, heading into Thanksgiving. Make sure you position your assets accordingly. As always, thanks so much for watching your carrier update today. And if you're watching on YouTube, be sure to hit like and subscribe and follow us on all our social media channels, whether that's LinkedIn, Facebook, or Twitter, and we will see you again tomorrow.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.